All right, we're going to begin the Deepening Relationships Through Video Banking in 2018 webinar. First, want to go over just a few housekeeping items. This webinar will be recorded. We will have a Q&A portion at the end. In addition to that, some of the infographics you will see in this webinar are on our website, otvideochat.com, under the industry resources, and there's some other items there that you might want to download, such as our Bank of the Future white paper. Agenda-wise today, we're going to talk about why consumers are flocking to non-traditional banks. We're going to look at some industry data of where banks are today and where they're headed, as well as some industry research on banking priorities by 2020. We're going to look at a video on customer experience of today's traditional banking journey, as well as how that journey would change with video banking. The new customer-centric banking model, and talk about that, as well as the optimized branch distribution model. And then talk about video banking in some areas of opportunity, and then answer any questions that you might have. So why are consumers flocking to non-traditional banks? 1/3 of consumers are already banking with at least one non-traditional bank. And of that, 54% of that 1/3 has 3 or more non-traditional banking relationships. So that begs the question of, the traditional location is key, having lots of brick and mortar branches from a branding and real estate perspective. And what's really come out of that now is the ability to be able to grow your bank based on branch licensing versus real estate. And we've seen that from the fintech companies. And this is why venture capital over the last 4 years has invested over $25 billion in non-traditional banks. In emerging markets like India and China, 50% of Gen Ys and tech savvy customers are already banking with non-traditional banks. And so we're seeing that on the rise. As you see over here in this right-hand corner, one of the reasons that you're seeing non-traditional banks taking a lot of market share is, number one, our money is already on our hip. We're a cashless economy, in the sense of most people have their money on their hip in regards to debit cards, mobile payments, having their money in their mobile applications with their bank. And really, the one thing that everybody is looking for that's very attractive from non-traditional banks is the customer experience. Having the best and the latest technology, as well as, having the customer experience outside of non-traditional banking hours, and having the technology focused on that customer experience. So when we look at the CSAT scores of traditional banks, less than 50% at 49.5, and then comparing that to non-traditional banks, the customer satisfaction is actually higher. And so why are they able to do that? Because non-traditional banks are able to have frictionless, digital, attractive offerings, because there's not the, legacy thinking. There's not, it's not constraint thinking. In addition to, they're able to roll out technology faster because there's not legacy systems to have to integrate to from that perspective. So talking a little about of where banks are headed by 2020. When we talk about where banks are headed by 2020, while that sounds a little, long out there, it's less than 24 months away. There was a recent couple of good surveys that came out recently from PwC, Capgemini, and then Deluxe had one on digital banking as well, that you'll see some of these stats from. 97% of banking CEOs consider innovation a key priority for both top and bottom line growth. Now, I don't know about the other 3% of CEOs. They're probably close to retiring. but it's definitely key in order to grow your bank. If we look at the UK, which we've always followed trend wise from the US, the UK this year reduced their physical bank branch locations by more than 50%. Now, a lot of this was due to mobile app transactions going up dramatically, innovation in mobile app banking, as well as video banking, the ability to still have that experience without having to go into a brick and mortar. And what that equated to was 9,100 branches closed in 2017. So it's no shock that mobile banking transactions continue to go up year after year. They're projected to go up 121% by 2022. That's more than doubling each year. And in addition to that, desktop is decreasing. So desktop's gone down over the last couple of years. Mobile surpassed it, and it will go down 63% by 2022. So looking at branch visits going down across all demographics in the U.S., projected 20 to 30% over the next 2 years. What does that really look like across the demographics? So typically households without children will drop because they're not establishing that first banking relationship. There's no need to go in as the demographic over 50 has migrated over the last couple years as the largest smartphone demographic. They're more into mobile banking. Gen Z is going to be dropping. They're starting out their life. They're starting out that banking relationship, whether they went with mom and dad's bank. Now that they've been in the bank, they're starting to understand finances. That will go down. And the largest demographic that's actually going into the branch today is elderly and low income. Now, that's going to go down significantly as the mobile banking goes up fivefold from that standpoint. So overall, in 2004, the average number of employees per branch was 13 on average. And this year, it's down to 6. So we've already reduced the number of branch employees, by more than half. And that will continue to go down as we start talking about optimizing the branch model. So looking at some of these reports I mentioned earlier and taking out some of the key insights, what are the priorities now to 2020? And again, this is from bank executives, community banks, federal credit unions, your community regional banks, as well as your big banks. The number one thing that came across the board is developing a customer-centric model. So 75% of banks are investing in customer experience and a customer-centric model. It's the number one investment globally, and the customers are driving that. Customers aren't comparing anymore their bank-to-bank relationship. What they're comparing it to is what they're experiencing across everything that they touch. So, you hear a lot about, the Amazon moment, the Uber moment, and, customers are comparing that. They want the instantaneous, they want it right now, they don't want to have to wait. If I can order something on Amazon, right this second and have it delivered this afternoon, that's going to be way faster than me being able to fight traffic, go to a retail store, get something, come back. And that's what consumers are comparing it to on having to go into the branch. The second one is deepening the relationships. So, this is key in growing your revenue of how to deepen the relationships and increase the wallet share with the existing customers that you have, not to mention not losing them to non-traditional banks. And so for 65% of banking executives, that's their number one marketing initiative. We'll talk a lot about this today. And, in deepening the relationship, you have to have that customer-centric model. You have to have that digital innovation, or you're not going to have anything to be able to increase. By 2020, the customer buying, so why customers are going to buy, is not on product or price. It's on customer experience. So this relates back to number one on having that customer experience. And number three, as no surprise, of digital adoption and innovation. So, only 10% of banking CEOs think that they're good at digital innovation. And 71% of those CEOs see non-traditional banks as a threat. So if you've ever listened to any of our podcasts on what we've done with, banking CEOs just from our conversations is, it's not keeping banking executives up at night about each other. It's, the folks that pop in that have digital budget, that have a bank license, that don't have to have physical locations, that are taking customers and taking market share. So digital disruption will outplace 4 of the top 10 banks in the next 5 years. If you reference back this webinar in 5 years, or mark my words, I think it'll be more than 4. I think that, I had conversations about this in retail, 5-7 years ago. I don't think anyone thought, that Amazon would displace large retailers that have hundreds and thousands of locations, and we're seeing that happening. So seeing the predictions on this, seeing some recent data from KPMG of where we are actually in the banking digital disruption is, it's not the future, it is here. So you need to be thinking about that. So optimizing branch distribution, 85% of banks see that as important, with 95% of executives seeing that branch is going to diminish significantly as customers are migrating to digital and mobile. Again, this goes back to, okay, if we're worried about the branch diminishing, how are we going to optimize this to still have those face-to-face customer interactions to deepen our relationship and increase wallet share? So if we look at the acquisition side for my marketing friends that are on the phone, I'm sure you've allocated, more and more of your budget to digital. Digital spend is going to be over $12 billion by 2020 for banking. That's up $5 billion just in the last 24 months. So, we're sitting here talking about now, we're talking about 2020. So just think of how that's going to increase over the next 2 years. And 63% of that is on mobile. So if you think about that and you think about your current banking mobile app today, and we're going to talk about how mobile apps, have to have innovation, and, it's not, you can't just be on par anymore. We talked, 5+ years ago about remote deposits. Obviously the big banks rolled it out first. There was a lot of naysayers on legal and compliance that is never going to work. And now, it's commonplace that, consumers demand that they can remotely deposit checks from their smartphone without having to go into the branch. Well, that was kind of the main reason that people went into branches. And so, now it's not good enough just to have that on par technology. It's what's next, what's going to be in the mobile app, and how do you get people to still engage with branch employees. And so looking at number 6, loan growth, it's the number 1 marketing initiative for credit unions. Obviously, it's the highest margin. As you look at branch distribution models, backing up at number 4, we've already taken, loans, auto loans, mortgages, private client investments out of every single branch, and only have those resources across some branches. So how do you optimize that? How do you connect the branches? How do you take advantage of your current customers and new customers that are shopping loans online? I mean, the number 1 fintech, non-traditional banks are going after the loan market and succeeding. And most of the new loans are coming from them, if you look at mortgage and auto perspective, because they're going after the highest margin, and consumers are fine with having that be a digital experience. So how does video banking solve key priorities? So 50% of financial institutions say that they're going to be launching video banking in 2017. It helps with optimizing the branch distribution in specialty areas. So not only being able to connect your branches through video, having folks come into the branch and being able to, while they're there, talk to a loan officer or mortgage in another branch without them leaving and going and finding a competitor. To be able to broaden your footprint. So to reduce your acquisition costs, and if we talk back about that digital marketing budget, you can't bring new customers into the fold by marketing them on digital, but then requiring that they go into a branch to open up an account. You'll lose them. Their conversion rate will be dismal if you can't give them that full digital customer experience. Convenience. If we look at customer convenience, which is king, which is driving the customer experience, this really gets down to the customer-centric digital banking model, which we're going to talk about. So I want to play a video that shows the traditional banking experience today and then how that would change with video banking. So we have a video that we've put together. It's a restaurant owner, which is business banking, one of your kind of busiest customer types. So let's watch this video. So let's talk a little bit about that video. As we talk about the customer-centric digital banking model, we talk about several things here. We talk about the branch. We talk about how the technology and the operations change that experience. So Steve owns a restaurant. He has a very hard time getting into the branch. Why? Because, traditional banking hours haven't changed in, many years. You're 8 to 5, 8 to 6, whatever your branch may be, a half a day on Saturday. As a busy business professional, by the time you can get in the car, get there, get back, you're already in a frustrated environment. We have, if you take the consumer point of view of I can do everything on my mobile app, I can do everything online, and if I can't do that, there's an issue. There's a reason I have to go into the branch. Well, branch employees are compensated on growing that wallet share and, doing the account reviews, increasing that account. And, we're putting them in a bad position in the fact that I go into the branch, I'm trying to get in and out as quickly as possible. I'm frustrated because I couldn't complete what I needed to do through my mobile app or online. And when that nice branch employee says, "Hey, Carrie, can we do an account review?" or "I want to talk to you about something," my token response is, "I don't have time. I'm busy," from that perspective. So in the scenario of Steve, while he was able to connect through video banking, he had extra time to spare and was open to that conversation
where when he, in a traditional banking model, that may never happen. So this drives this slide on the customer centric model. We talk about the branch, some key things on the branches, reducing the size. The size of the branch has already been reduced. So reducing the number of employees, being able to grow your business based on not having to have the real estate, the brick and mortar. We've got clients using ATMs to drop in some areas that they want to be in, but connecting our video to that ATM. And I'm not talking about through the ATM screen, like video ATM. I'm talking let the consumer use their own device, not having the huge capital outlay of having to have the video through the ATMs, but letting the consumers use their own device. And then really, the basic transactions of your coming into the bank for those folks that want to still come into the branch and have a coffee or have a donut, giving them, having tablet stations for them to be able to do their basic transactions or ask a question if they need it. And then really looking at, your specialty areas, your wealth management, your loans, auto, mortgage, business banking, and having that across certain branches and being able to connect that through video stations. So, having a computer behind glass or in an office or in a closed cubicle type environment where a customer can, while they're in there, literally you can direct them to go connect to a mortgage officer that's sitting 200 miles away or 2,000 miles away, but still being able to have that video experience as if they were sitting across from you at the table. So how does that change the technology? Well, remote deposits just not good enough anymore. You need to have innovation in your mobile app roadmap. You need to be able to connect the customer remotely and have that full digital customer experience. If you're spending money on digital and you're trying to acquire customers that way and you don't have the customer experience behind that, your conversion rate is going to be significantly less. It's proven that video banking can increase conversion rate on your web, on your mobile app by 30+%. Some use cases up to 70%. But just taking whatever your math is on the traffic you're driving today and increasing that, you're talking millions of dollars in increased conversion. And then local banks, regional and credit unions, community banks have a huge opportunity here because you can innovate much faster than the big banks. And by having video banking and giving you a competitive advantage, increasing your footprint, it's projected that some of these community and regional banks, can be big players and national players because you don't need the brick and mortar anymore. So how does that change operations? I love this picture here of, the business banker and, mom's sitting on the couch while her daughter's playing and, there's toys all over the floor. This is real life, right? So if I had to, if mom here had to load up her daughter, load up the baby sleeping, go into the branch, as a branch employee, it's going to be a nightmare for you to try to talk to mom with the kids running around. If you can talk to mom here, and she doesn't have to leave her home, this can extend the banking hours, and have a centralized environment that after the branch is closed, you can video bank with a branch employee after hours. This is what's driving non-traditional banks is they don't have the constraints of or legacy thinking of traditional banking hours. Most people don't need to talk to a banker, from 8 to 5. It's when they get off work, it's when they get home and they're paying bills or they're, most small business owners are doing their books on the weekends or at night, and that's when they have their questions. So if you're doing video banking, how does that change the operations, the attire? Well, you want that video employee to look just as if I was walking into the branch. So they may be videoing with your, bank golf shirt on or, whatever your tellers or, branch employees wear today. And then think about the branches as kind of different classes. As we talk about the distribution model, you're going to have engagement hubs, branches that, want to engage and, we're there for people that want to, hang out and have conversation. You're going to have education and advisory locations, which are critical, especially for your Gen Zs and millennials that, need financial advice, as well as you're over 50, that you can be able to video into a financial advisor, video in to get advice on mortgage or credit cards or whatever it may be. And then lastly, having your centralized specialists, you don't need to actually have specialists in a brick and mortar branch location. I mean, the big banks have been having mortgage and auto and other things in, contact center environments for years. And so you have to, open your mind to not having those folks in an actual branch. So let's talk about the branch distribution model. So I want to show an example here of a customer coming in. So how can I help you today? They could come in through the branch, they could come in through the website, they could come in through the mobile app. And in this scenario, we've got a mom here that wants to talk about a mortgage. She's looking to buy a house and, she doesn't have time to come into the branch. And so the decision's kind of here of you could have employees, in a branch location, a centralized environment, that through video banking, you can optimize that distribution model and have them all connected. So if we look here, I've got a couple of things here. You have an advisor that's in a centralized location here. You've got someone that's sitting in the actual flagship local branch, and then somebody that's in a specialty branch that's actually in another physical location that might take it. And so based on mom needing to talk to somebody right now for pre-qualification, the person that was available is sitting in a specialty branch. Here he is now. He's connected to mom. As you can see in the background, mom's at her kids' baseball game. This is, probably, in the afternoon, in the evening. And, this is the time that she wants to talk about the loan. Now, the great thing about this that makes it better than a phone call is, I can call into a 1-800 number. A lot of your demographics won't use a 1-800 number. They want to just do it online. But if mom wants to talk to somebody, she's now building this relationship in the highly competitive market of mortgages, high margin, high competitive. And the person sitting here, the gentleman, he's able to talk to mom. Maybe she shows through video, hey, look, there's my son. He's up the bat. They're building rapport. But most importantly, she's instantly talking to that loan officer. He's taking the competition out of it. If you're able to read the mannerisms, the buying signs through video, mom's not going to hang up the phone and call the other competitor over the phone when she just had this nice video experience. So increased customer satisfaction, increased revenue, increased close rate in this scenario. So areas of opportunity for video banking. So there's not one area in the bank that cannot utilize video banking to grow revenue, reduce costs, and experience. So we're going to talk about some of the areas because I know we have a wide variety of different departments on this webinar. So on the consumer side, anything around acquiring or servicing the customers, you can use video banking. Increase wallet share. And so, to talk more products and services, whether it's closing from an acquisition standpoint or, helping customers that don't want to come into the branch. Loans, there's, whether we're talking mortgage, whether we're talking business loans, whether we're talking auto loans, being able to have that hand-holding process, being able to build that relationship, that competitive advantage. One of the scenarios we're in right now with a large auto loan company is that, they're able to, it's been around for years, but it's kind of resurfaced as remarketing, being able to send you get approved for an auto loan, mail you the check, and you can take it to any dealership. While that should be a simple process, banks underestimated, especially millennials and Gen Zs, having questions about that process. Can I take it to any dealership? What do I do with the check? What if it's less than the amount? How does all that work? So there's a high abandonment rate on that for conversion. So the ability to video and literally talk to somebody for 2-4 minutes, answer those questions, and complete that transaction would increase that close rate dramatically. When we talk mortgage, your first time home buyers, your VA loans, even your kind of high maintenance jumbos require hand holding, and they want to see that person, and that person may be in California and they're in Texas, and that's a great way to build the relationship. We talked about the business side earlier in our example with Steve, the restaurant owner. Business people are busy. They expect a higher level of customer experience, and business bankers, the only way to really grow those relationships is to do it at the convenience of that business owner and really understanding what's going on with that business owner. Most business owners have, a handful of more banking relationships because they don't have time to hear about additional products and services, and they just go after what's best for them. Now, non-traditional banks have been doing investments and money market accounts and wealth management for a long time. And so the technology is there, and most of the people that have 3+ non-traditional relationships, a lot of it's in investment, a lot of it's in the loans category. So how do you compete at that regional and community level? The ability to be able to have that technology and be able to offer that face-to-face advice versus having to come into the branch should be able to increase wallet share there. Mortgage, we've talked a lot about. And then lastly, kind of the forgotten one that a lot of banks ask us about is really around hiring and recruiting. So you're opening branches, you're hiring people. You may be a branch, VP of retail or branch manager, and you've got employees in all these different locations. And the ability to video chat and do virtual interviews, the ability to connect with your employees is very good in that regard, building relationships, retention, hiring higher caliber of employees. So lastly, I want to talk about 6 things to consider when thinking about a video banking partnership or vendor. Number 1, you want the video to be embedded in the customer experience and where you're driving people today. So whether you're driving people from a marketing standpoint and their prospects, or whether your customers are connecting today. So you want the video to be able to integrate into your mobile app, your website, or if you don't have a mobile app, having that as a mobile experience. So customers aren't having to leave and go elsewhere to video with you. Same thing for, in the branch, in the car, wherever it may be. Secondly, the ROI. So there's a lot of folks that have done video banking historically. And people think video banking, they think of hard terminals, they think of, video and drive-through in banks or on the ATM. That's not what I'm referencing when I'm talking video banking. What I'm talking about is letting the consumer connect through their smartphone, their device, hit a button, and connect with a banker in a branch or centralized location. And having the banker, the teller, the branch employee, wherever they may be, connect through their computer, through internet and a webcam. That's what makes the cost to roll out affordable for community and regional banks, just as if you were a top 5 bank. There's no reason that a community bank or regional bank can't afford that type of video banking technology to get their competitive advantage. And given that it's a platform as a service, it's plug and play, It requires minimal IT help, and or constraints in that area. You can roll it out typically in 4 to 6 weeks. So think of the competitive advantage. Going back to the ROI, you should be able to see your ROI very quickly. Some banks couple weeks, some banks a few months, but we're not talking years here. And then the reporting. You want It's not just about providing the video screens and the video experience. There's an entire dashboard that goes behind the video so you can route it to the right employees regardless of what branch they're in. You're able to report on the customer coming in, who were they routed to, why did they call, why was the video, and then measuring the customer experience. So I can't speak for other people's technology, but one of the things that is great about our technology that banks find very useful is at the end of the video journey, the end of the conversation, they get an instant customer survey that's configured that comes up, and the completion rate's over 80%, but you get the instant customer feedback of how that experience was. One thing that's been great is customers that have done video chat, 65% of them will do video chat again. And so it's a very high, repeatable, great experience and can increase your CSAT scores. Hardware. There's definitely people in the market that require you to buy their hardware, servers, cameras, all that. That's not where the industry is. You want to be able to have video chat at your fingertips, regardless of where the employee is. You don't want them tethered to a camera, a desk, and have to maintain expensive servers, because streaming video, you're talking gigs and gigs of data, and you don't want to be hosting that on your premise. And then lastly, you want to work with someone in the video banking industry that has the expertise in banking, that has the expertise in operations, and can really look at the use cases. What's on your roadmap? How does it align? And really get you to be able to get that ROI and implement quickly. So I know I went through a lot of this quickly. I'm a fast talker, but I'm going to let you have some Q&A. There's a Q&A portion on the webinar. You can submit questions. I will answer as many questions as I can get to. Again, we did record this webinar. There will be a recording, and it will be available on our website as well. So first question, is video banking just for younger demographics, as our customer base typically on average is over 50? Great question. So if you think about the highest smartphone increase in usage, it's with the demographic that's over 50. And what we're seeing and industry data, if you think about the over 50 demographic that has teenagers, they may even have grandkids, they're FaceTiming today with those folks. So whether they have iPhone or Android, they're FaceTime, they're Google Duo, they're doing it today. And so they're becoming more and more tech savvy. They're choosing to use those channels. And so it's really across all demographics. You'd be pleasantly surprised to see that. But then taking the reverse, the Gen Zs, we have a really great infographic on our website under industry resources about banking and different generations. And when you look at Gen Zs, they don't want to text. They don't want to dial a phone number. They want to FaceTime everything because they want to see they're authentic. And so that's what they expect, not only consumer to consumer, but business to consumer. So next question, conversion rate. We're talking about conversion rate. What would you typically see video banking increasing? So typically, if you look at industry data, banking conversion rate on their website is typically 3%. And the average value of a customer
varies bank to bank, but we use the industry average of $921 on an annual basis. If you take typical industry video banking statistics of increasing conversion rate 30% plus, just if you take 10% and you say we went from 3% conversion to 3.3% conversion, depending upon how much traffic you have coming to your website, you're talking millions of dollars per year. And for some banks, millions of dollars per month. We have an infographic on our website that goes through this line by line of what I just said if you want to take a look at it. And then we have a really cool tool that does that. If you want to schedule a call, we're happy to put in your numbers and give you true numbers in that regard. Next question, is there an industry leader technology-wise in video banking? It's still somewhat of a fragmented market. I would say that, there's traditional players that might be your telephony provider or your ATM provider that offers video banking. And I wouldn't really call it video banking in a true sense. They offer a video kiosk. So you're going to have to buy their hardware. They're going to have to send their guys out to wire it. You're going to have to get cameras, and really it's not scalable, right? So you're going to spend a lot of money. If you're a regional or community bank, it's going to be a big capex, but it's not really scalable. And then those solutions don't allow customers to connect from their mobile device. We're definitely a leader or the leader in video banking because of our technology, because of the low cost to implement and the quick time frames, and not having to install and or host any hardware or software. It makes it highly scalable and very easy to get into a roadmap and give you that competitive advantage. All right, well, it looks like I don't have any other questions. Again, I'm Carrie Chitsey Wells. I'm the co-founder and COO of One Touch Video Chat. I want to thank you for joining the webinar today. If you want some great resources, we've got a Bank of the Future white paper. We've got other webinar recordings in banking. And if you want to stay tuned in, we have a webinar each month on different topics. Please go to our website. It's listed here. And you have my email address and phone number here if you need to contact me. I want to thank you again for joining the webinar. And I will give you a few minutes back to your day. Thanks.